silver could move up by multiples even in the next 6 to 12 months. So that's an incredible opportunity, not just from an investment point of view, but also not obviously from wealth preservation point of view. And that's an opportunity which is one in a lifetime. So,
ladies and gentlemen, after 2 months, Egon von Greyerz is back at our monthly interview. Egon, great to see you. We have interesting topics, as always. Japan, India, BTC, and gold, of course.
Jan, always good to talk to you. And you know, the excitement is increasing day by day now. And I think we'll see that with a few pauses in between. We'll see that for the next few years. The end of the monetary era is not going to be easy for the world. And this is what we're entering now.
That's true, Egon, and we saw it, the high in gold recently. We had a short setback, but it recovered quickly. As you just said it, Egon, we are facing a global mess, and I found there a very good graphic by the Visual Capitalist. Let's start with that. Isn't that interesting, Egon? The whole world is in debt, and Japan marks the center next to Sudan and Venezuela. Greece, by the way, also. So we are facing a global mess. Japan is our bigger topic today. I think there is no way out. We discussed that a couple of times in the past. There is no single one good paper money in the world. So now there's only one force attracting a lot of buying, and this is gold.
Yeah, that's absolutely correct. And I looked quickly at that the circle of debt, horrific circle of debt. And you know, the US is around just over 120, but I didn't see Switzerland there. Maybe it's hidden somewhere. But at Switzerland, just to compare to a well-managed economy, well-managed country for a very long time, Switzerland's debt to GDP is 25%, 25% as against 230+%, and the Swiss the budget deficit is 200 million, which is 0.2% of the annual budget. Is nothing. This is how a well-managed economy and a well-managed currency behaves. That is an economy that doesn't run on deficit, doesn't print money, and doesn't have constant debt increasing. So that is how, and that's why the Swiss currency has been absolutely unique in holding its value much better than every other currency. So it's there's no question of gold backing of the currency or anything of that kind. It's just they manage their expenses so that they're lower or not higher than the revenues. It's so simple. No Western country in the world manages that today, Jan.
That's true. My congrats to you Swiss guys, Egon. But Japan is the big topic because we saw the headlines. Some people are expecting the carry trade, the yen carry trade, to reverse, and that could cause really chaotic market circumstances. But I am not of that opinion. I will ask you for yours in a moment. Let me show the Japanese yields first. But Egon, I would start with a quote from an article that I will link also to the video. The raise in yields followed the announcement of a stimulus package exceeding 17 trillion yen, equivalent to approximately 110 billion US dollars. That is extended to over 130. This is intended to counter inflationary pressure and stimulate growth. And what happened, we see it here, the 10-year yield increasing today. That is a very long-term chart here. And also the 30-year yields, it goes back here to 99. And look, we are having now, Egon, 3.3% on the 30-year Japanese bonds. At least so far, there is no reverse of the carry trade in sight, because otherwise the yen would strengthen and the yields would go down, but it's not happening. I really think that is completely wishful thinking.
Yes, I'm slightly more cautious than you are, Jan. You realize that this increase in long-term rates from virtually zero to now 2-3% or more. That means the cost of financing for Japan going up from 100 billion to almost 300 billion. And that's more than they can afford. So that's inflationary. Stimulus packages are inflationary also. And I see a high risk of this carry trade. Carry trade means that countries or speculators, let's say, which is governments and traders around the world, are borrowing yen, and they have borrowed yen for nothing, and then investing it in other things like it could be US treasuries for yielding 2, 3, 4% depending on the period they're investing it for, or Bitcoin, for example. But I think that now is much less attractive. So I could see, it doesn't happen overnight as we've seen, but I could see the carry trade declining first gradually, and then I can see it imploding one day. So we have been waiting for this for a very long time, and it's just unreal that the Japanese have been able to borrow so much money with such a rotten economy and such a massive debt to GDP. So I would be concerned about the carry trade, and I certainly wouldn't have any position in that at this point.
And the Japanese Egon Prime Ministry even said they would be available to step into the market if the currency exchange reaches 160 to the US dollar or so.
What happens then, Jan? That means that they print more money, and it means that the yen will weaken because the printing more money is inflationary. They'll mean the yen will weaken, and it means that Japanese bonds will go down and interest rates up. So I think, it's a very, very sensitive equation, this. And, I'm afraid that maybe long-term Japan, like most Western countries, will lose out with debts exploding, interest rates exploding, inflation exploding. And, that whole carry trade will be in a mess one day. I will certainly keep out of it, Jan, let me say that.
That's a good question, how the mess will look like at the end. I will quote here from Reuters another sentence from the central bank governor. While the Bank of Japan has kept rates steady since hiking them to 0.5% in January, Ueda from the central bank has dropped strong hints of action in December or January next year. So they would even consider to increase the rates. And they're going to look at 0.5% in the USA. The rates are much higher. And we just saw it. The yield of the 30 years is over 3%. That's a subsidizing program for the banks. But nevertheless, we saw the charts, how the yields develop. The losses are there. Massive losses, already trillions of losses for savers and banks, Egon. And they can try diversionary tactics and pretend to have the situation under control. But they haven't, I think so. They do not have it under control. It is sooner or later game over.
Yes, absolutely. And remember that they are still big investors in US treasuries. And one day they will need to dump those also to actually finance their own problems. And that'll be also bad for the US and bad for the world. So, it comes together, Jan. And the end of a monetary era means massive debt explosion, massive increase in rates, as I said before, and total financial disaster when it comes to surviving this. And it's, as we know, it's not going to end well for the Western financial system. It's not going to end well for Western currencies, dollar, euro, etc. But it's going to obviously continue to do very well for physical precious metals, Jan.
That's a good keyword, Egon. There is one solution, at least for the financial part of this mess, and this is, of course, gold. Let's have a look at the gold chart in yen. Here it is over the last few years. It's also strong in dollars today. Another 1% plus today, Egon, and it looks more or less like Turkey. But I think this is a phenomenon we will witness around the world. It is something to talk about, a possible end of the financial era for years, and then to see it happening in front of our eyes. This is really a dangerous time, and we can only encourage the people to take financial precautions. We just saw it, not just in yen. Get your gold now.
Yes, Jan, I mean, this is what we anticipated when we invested heavily in physical gold 25 years ago, of course. And as I've said before, it is now starting this trend of the decline of the Western monetary system is actually going to mean that precious metals, gold and silver, are going to accelerate now. They've been, they're still doubled in the last 2 years, and gold is up 35% this year, and silver is up over 50% this year. But especially, I mean, gold is also always going to be the core holding of the precious metals. But now I see a massive opportunity in silver. I think silver is going to catapult from here and move at least twice as fast as gold. And I think silver is now right at that marginal line that he's been holding since 1980, $50 1980, $50 2011, and $50 now, or just over. I think silver is just going to explode or catapult, as I said. And I think silver could move up by multiples even in the next 6 to 12 months. So that's an incredible opportunity, not just from an investment point of view, but also not obviously from wealth preservation point of view. And that's an opportunity which is one in a lifetime. So people, they should hold gold, but now is the time to be more also exposed to silver, because silver is a real opportunity today.
I can only agree to that, Egon, of course. And we stay in Asia and have a look at India, because a good month ago, there was an important announcement from India. Let me quote the Jerusalem Post. India has taken a historic step towards the broad financial recognition of silver, updating guidelines that formally include silver ornaments as eligible collateral for small loans under new Reserve Bank of India lending rules set to take effect April 26. While not a formal valuation ratio, the policy sets collateral eligibility at 10 kilo of silver versus 1 kilo of gold, a comparison analysts view as symbolically significant. So Egon, I think that is very important for India. They always used gold and silver as means for their savings. They used their paper money for their daily obligations, but they always saved in precious metals. And now, why not using their precious metals, in this case silver, for small loans to encourage the economy? I think a very wise step, and that could also increase the demand for silver. What do you think?
Absolutely. No, I mean, the Indians have always understood, the importance of precious metals, because every Indian holds gold, physical gold, often in the form of jewelry, of course. And they get always jewelry for gifts for weddings or birthdays, etc. But now also, they're actually focusing more on silver, which is absolutely right, and the timing is right. Jan, I mean, there is only just under 1 billion ounces of silver produced every year, and there is a massive shortage every year of silver, of about 200 million ounces. And that is only financed in futures markets and by lending silver temporarily to make up the deficit. That's not going to work in the long term. Remember that industrial demand for silver has gone from 10% of silver production to now 50%. And obviously that is for solar panels, car batteries, and electrical and electronic products. Jan, funnily enough, you can't use paper silver to make solar panels or to make electric car batteries. You can't. You have to have real physical silver. And that silver is not going to be there. So this is why we will have a massive squeeze on the price of silver. And that's why it will go up by multiples here. So, I see that there's going to be a real problem in the silver market with all of these paper shorts not finding physical silver when people ask for delivery, which they will do. So we will have a massive squeeze, and this is why silver will go up by multiples in a relatively short period of time, in my view.
Let's come to our last topic for today. the so-called new gold, so it doesn't look as golden as it used to be. I talk about Bitcoin. Here we have a big promoter of Bitcoin who just sold. I talk about Robert Kiyosaki, and we read here that he just sold for $2.25 million Bitcoin. He bought them for 6,000, by the way, and he says, I'm still very bullish and optimistic on Bitcoin and will begin acquiring more with my positive cash flow. But nevertheless, the last weeks were really bloody for Bitcoin investors. And I would say, as liberal or libertarian, okay, the best money should win. They should compete against each other. I think this is now the litmus test for Bitcoin. And it proved our caution. I think we were right, Egon. It's not a store of value. It is rather something to gamble, like a technology stocks on steroids.
Yeah, isn't it interesting? You know, every time we see Bitcoin mentioned, as the illustration is always a round gold coin with a B on it. You know, it's not gold. It's an electronic entry on a computer or on a memory stick. That's all it is. And, you know, again, just like you can't use paper silver to make things, you can't use electronic entries to make things either. And you know, we've always said that Bitcoin will either go to 1 million or to zero. In my view, the risk is higher that it goes to zero because I think it's a Ponzi scheme. But I know a lot of Bitcoiners will not agree with me, of course. It doesn't matter. We don't own Bitcoin because Bitcoin is not for wealth preservation. It can never be because it's not in physical form. If you ever need it, it's just on a computer or a memory stick, as I said. So now, I know Robert Kiyosaki, you know, he's a great guy, but his whole investment philosophy is based on debt. Borrowing as much as possible, leveraging as much as possible. He's done that in the property market, and of course has been successful with that. And I'm sure he's doing that with Bitcoin also. And that, as we approach the end of a monetary era, in our view, you know, we are focusing on wealth preservation, not on speculative gains. I think borrowing and high leverage is not the time now in order to preserve your wealth. So it's a different philosophy. It has worked extremely well during this very long and substantial money printing period. I think that's now passé, and therefore we should not hold major amounts of debt. We should hold real assets like gold and silver, unencumbered. That is, not borrow anything against it. That's the view we look at pure wealth preservation.
That was a good final statement, Egon. It's really the time to preserve your purchasing power now, because when the purchasing power of the others is decreasing with their paper wealth and you can protect yours with your physical precious metal assets, then you clearly improve your own position, right? By the way, to our audience, before I forget it, I would suggest to make a Q&A session again in December.
Yeah, absolutely. It sounds good. I know people always like to ask questions, and I enjoy answering them to the best of my ability. So yes, let's do that, Jan.
Absolutely. Let's do that. Till next month, Egon. Thank you. Bye-bye.
Okay. Thanks very much. Thanks. Bye-bye. Bye.
Bye-bye.